Okay, let's jump right into this explainer, because I want you to picture something for a second. Imagine you finally hit your stride. You're a highly successful freelancer, an independent contractor, maybe a solo entrepreneur, and you are bringing in more money right now than you literally ever have before. You've completely cracked the code on marketing yourself, your skills are in incredibly high demand, and honestly, life just feels so rewarding right now. This is that euphoric reality we all chase, right? Your inbox is constantly pinging with new client inquiries. You're closing way bigger projects. And you look at your bank account, and that balance is just rapidly growing week by week. So naturally, you start taking on new subscriptions. Maybe you finally upgrade that sluggish laptop, or you start planning that long overdue vacation. It's the absolute perfect picture of financial success. Everything just feels right. But then, one random Tuesday, you check your mail. Or maybe you get that dreaded email from your accountant, and you see a number exactly like this, $15,000. Or maybe it's 20, or even 50,000. Out of absolutely nowhere, a massive, entirely unexpected tax bill has just landed right in your lap. And in a split second, all that euphoria, it turns into pure, sinking panic. Because here's the harsh truth. That money you saw sitting in your checking account, the money you were so sure was yours to spend, a huge chunk of it was actually never yours to begin with. Guys, this is the crushing reality of the freelancer tax trap. And every single year, countless self-employed professionals fall right into it. So today, we're going to completely expose exactly how this trap works, and far more importantly, how you can escape it. So let's look at Chapter 1, the illusion and the mechanics. We really need to unpack why this specific trap catches so many incredibly smart professionals totally off guard. I mean, it's not because we're bad at math. It's actually a fundamental misunderstanding of how freelance money works. See, when you're a traditional employee, you live in a reality of automatic withholding. The money that hits your account on payday, that's basically yours to spend. Your employer has already siphoned off the taxes and sent them off to the government. But the freelancer reality, completely different. You receive gross payments. So if a client pays a $5,000 invoice, you get the full $5,000 deposited. Boom. No automatic withholding, no HR department handling your taxes behind the scenes. You bear 100% of the responsibility. Which brings us to Chapter 2, the cash flow illusion. Because you're getting those gross payments directly, your brain starts playing some serious tricks on you. This is the hidden mistake that triggers the whole trap. Let's say, hypothetically, your true available cash is actually only about 70% of your gross income, and your tax obligations make up the remaining 30%. Well, the cash flow illusion happens when you see those gross payments rolling in. Project deposits, consulting fees, huge wire transfers, and your bank account just swells up. You log into your app, you see this massive number, and you falsely assume that 100% of that pie is available cash. So what do? You start spending based on the whole pie. You buy the expensive camera gear, you book the business class flight, you level up your whole lifestyle. But that 30% slice, it's a ghost. It literally belongs to the government. And the psychology behind this is so powerful. Why do we fall for this illusion? Well, it's because human nature inherently prioritizes immediate rewards over future responsibilities. Having that cash in your hand today feels real, it feels immediate, and it feels incredibly rewarding. A tax bill that isn't due for another 9 months, that just feels like this distant, totally abstract concept. We naturally just focus on today's income instead of tomorrow's obligations. But as we're about to see, reality always catches up. Moving on to Chapter 3, Hidden Record-Keeping Mistakes. So the cash flow illusion is really just the beginning. There are even more costly hidden traps waiting in the shadows for disorganized freelancers. Because guess what? It's not just about saving for taxes, it's about proving what you actually owe. We're talking missing receipts, mixing your personal and business spending on the exact same credit card, forgetting perfectly good deductible expenses simply because you didn't write them down, losing track of paid invoices. If your financial records are basically a chaotic digital shoebox, or let's be real, an actual physical shoebox crammed with crumpled up receipts, you are walking straight into a nightmare. Without meticulous records, tax season morphs from a minor routine chore into a highly stressful, financially draining audit risk. You end up relying on pure guesswork, and guesswork, that always costs you money. And oh man, here is a massive trap, completely ignoring periodic quarterly tax obligations. A lot of new freelancers just kind of assume, hey, I only need to think about taxes once a year, right? Wrong. Depending on where you live and your income level, the government usually wants their cut throughout the year in periodic installments. If you wait until the very end of the year to file and pay, you aren't just getting hit with a massive unexpected balance, you are often getting slapped with nasty penalties and interest on top of it. This creates severe financial stress and massive cash shortages that can, and literally do, bankrupt thriving freelance businesses.
Let's look at Chapter 4, the cost of inaction.
When you combine that cash flow illusion we talked about with poor record keeping, you arrive at this fascinating but tragic reality. You end up essentially tipping the government by vastly overpaying your taxes. It's crazy. People overpay simply because they fail to track perfectly legitimate business deductions. I'm talking about your software subscriptions, like your design tools or your CRM, a portion of your home internet bill, professional education and online courses, that shiny new office equipment, even business-related travel and mileage. If you lack the organization to track these things throughout the year, you can't deduct them. And if you don't deduct them, your taxable income looks artificially high on paper, which means you end up paying thousands of dollars in extra taxes that you legally never owed. You're literally losing money just because you aren't organized.
Which brings us to Chapter 5, the Preparedness Protocol.
But listen, there is a way out. We are shifting the narrative right now from financial anxiety to absolute empowerment, because this right here is the ultimate practical solution to escape the tax trap for good. And the crucial point is that you need to implement the SMART system today. Step 1, separate your personal and business finances immediately. Go open a dedicated business checking account. Step 2, track every single dollar of income and every single business expense. Step 3, maintain digital records and receipts using cloud software. Seriously, throw away the paper shoebox. Step 4, review your finances monthly. Actually sit down and look at the numbers. Step 5, automatically set aside a specific percentage of every payment into a totally separate tax savings account the absolute second you get paid. And Step 6, know your filing deadlines well before they arrive. If you run this exact protocol, I promise you, you will never be caught scrambling again. Because as this quote says, the goal isn't tax avoidance. The goal is tax preparedness. The biggest freelancer tax trap out there isn't some super complicated tax law. It isn't malicious government policy. The real trap is making the dangerous assumption that everything will just magically work itself out at the end of the year. Trust me, it won't. You have to be prepared. Because the truth is, the freelancers who succeed long-term, the ones who actually build real, generational wealth and live stress-free lives, they aren't always the ones who earn the highest hourly rate. They're just the best planners. Obviously, earning money is important, right? It gives you options. But keeping control of your finances through meticulous, routine planning, that is absolutely essential if you want true freedom. So, we'd absolutely love to hear from you. What is the biggest financial challenge you've faced as a freelancer? Drop your experience in the comments below. Let's start a conversation and learn from each other. And hey, if you found this explainer valuable and you want to truly master your money, make sure you hit that subscribe button for NexClaim. We are constantly breaking down the complexities of taxes, insurance, banking, and wealth building so you can keep way more of what you earn. But before you go, I want you to ask yourself one final question. Are you running a highly optimized, structured business, or are you just running an unorganized hobby that the government is profiting from? Thanks so much for watching, and I'll catch you in the next explainer.